Let's do our call of the day. It's Goldman Sachs called the catalyst best idea at Deutsche Bank. Shares up 29% year to date. So that's where we're focusing on this call, getting about a 2% ramp today. Nobody owns it here, which is, I'd like to know why. Nobody owns a bank stock on the desk except for Bank America. In a
growth fund. Go figure.
So
well, that was a valuation call. I mean, obviously within the financial space, it's really a macro call. Most of these stocks really move on interest rate expectations, on the economy and expectations for the economy. That being said, I think as we entered the year, that sector was bruised to death. I mean, the valuations, and to this day, many of those stocks are still trading at a discount to the market. I think in the case of Goldman, that's one that maybe has suffered over the past month a little more than the rest. It's down about 9%, 10% off its all-time high. So maybe it's being opportunistic in the market that continues to go up. But financials is an interesting play, and I think if you're selective, you'll do fine.
I think Yana is right that this is very much a macro play, and the macro is starting to shape up a little bit better for financials. So, for example, the Fed does manage to surprise the markets, or at least be in line with the markets as far as the Fed cuts go. They may eventually succeed at steepening out the yield curve. Not much, but any steepness would help the financial sector. And then outside of that, if you look at loan volumes, are actually doing pretty good. Housing's picking up. So that consumers picking up. So there's a bit of an optimistic case that is building up for financials here. And it's a cyclical play, it's a value play, all of which is part of the rotation that we're experiencing today.
Why no banks?
Well, because I'd buy bonds if I want, or I'd short bonds if I wanted to buy banks.
But you've owned them in the past?
I did. So I haven't owned a bank since May of last year. I actually sold Citi and most of my B of A in 2018. Don't think I've really missed anything if you take a look what the market's done.
No, it's amazing, though. 18 months with it. You haven't owned any of these names?
Banks have actually done tremendously well.
Well, recently they've done well, but I hadn't missed anything before. But Citi, I looked today where I sold B of A, and I sold like 28.5, 29, and take a look at the market where it is. So you can pick any moment in time, say it's done well. But Goldman, I think the Deutsche Bank analyst is a little early, but there's nothing wrong with being early, because he's heard us talk about it. He's heard everybody, well, not you on the desk, but John, myself, and others talk about that David Solomon is the right person at the right time, that the changes he's making, going to a digital platform, doing the Apple Card, everything else, are great. They're going to take time to take hold. They had not a great quarter, particularly a relatively bad quarter, but that's their investment cycle as well. So I think you have to forgive that. So I've looked at Goldman. I just haven't pulled the trigger yet. And, I think that we'll see rates come back down a little bit. I'm not looking for anything near zero.
No bank
either. The opportunity.
Sorry.
No banks
for you either.
I haven't been out of them as long as Stephen, but I have been out of them for virtually all of this year, Scott. The return on equity over at Goldman was another one of those reasons when they reported. It dropped down to 9% return versus 11. That's just in one quarter. Granted, they can turn that around, and hopefully with Mr. Solomon, they do that. They're also hopefully putting 1MDB behind them pretty soon, and that was another outlier out there. That number keeps dropping now.
They said $2 billion now versus 5 that they originally.
Yeah, and initially they said 7.
Yeah.
Not Goldman, but Malaysia in that one. But I think getting that behind them and then giving Solomon a little more runway here, this could be a good trade. I'm not in it yet.